A major development is underway in Washington. A new bill proposes to completely end federal taxes on Social Security benefits by 2026. This legislation, championed by several bipartisan lawmakers, could provide massive relief for millions of retirees who've spent decades paying into the system. For years, many seniors have argued it's unfair to be taxed twice, once when earning their income and again when receiving benefits. Now, that unfair system may finally be changing. If passed, the bill would mark one of the most significant retiree-friendly tax reforms in decades. Currently, up to 85% of Social Security benefits can be taxed depending on a retiree's income. This rule, established in the 1980s, was meant to apply only to higher-income individuals. But over time, inflation and stagnant income thresholds have dragged millions of middle-class retirees into the taxable zone. The new bill aims to reverse this outdated policy by making all Social Security benefits completely tax-free at the federal level. Lawmakers say this will restore fairness to the system and give seniors more money each month to handle rising costs. Supporters of the bill argue that taxing Social Security benefits effectively punishes retirees who worked hard and saved responsibly. These individuals already paid taxes on their earnings while working, so taxing their benefits again feels like double taxation. The new proposal seeks to eliminate this burden, ensuring retirees can keep more of the income they earned. Advocates say this change will especially help those on fixed incomes who struggle to cover expenses like housing, healthcare, and groceries amid inflation and economic uncertainty. The proposed law, known as the Senior Tax Relief Act of 2026, has gained momentum in both the House and Senate. Sponsored by lawmakers from both parties, it reflects a rare moment of bipartisan agreement in Washington. With more than 70 million Americans receiving Social Security benefits, pressure is growing on Congress to pass meaningful reforms. The bill's supporters claim it will not only improve retirement security, but also boost local economies as seniors have more disposable income to spend. One major issue driving the proposal is inflation. Over the past several years, the cost of living has soared, eating into retirees' fixed incomes. Even with annual cost of living adjustments, COLAs, many seniors say they can barely keep up with expenses. By ending taxes on Social Security benefits, the bill could effectively raise retirees' take-home pay by hundreds of dollars per month. This relief could mean the difference between financial stress and stability for millions of older Americans living on limited means. Critics, however, raise concerns about how the government will make up for the lost revenue. Taxing Social Security benefits brings in billions each year for federal programs, including Medicare. Eliminating that stream could widen the deficit unless new funding sources are found. Some lawmakers have proposed offsetting the cost by increasing taxes on the wealthiest Americans or closing corporate loopholes. Others argue that the benefits of helping retirees outweigh the short-term fiscal challenges. The debate over funding will likely be one of the bill's biggest hurdles. Under current law, individuals earning more than $25,000 annually and couples earning more than $32,000 must pay taxes on part of their Social Security income. Those limits haven't changed since 1984. Because they were never indexed to inflation, many middle-income retirees now face tax bills originally intended for high earners. The new bill aims to fix this oversight by repealing those thresholds altogether, ensuring no Social Security recipient pays federal taxes on their benefits after 2026. For retirees, it's a long overdue correction to an outdated system. If the bill passes, the change would roll out gradually. In 2025, the taxable portion of benefits would drop from 85% to 50%. Then by 2026, benefits would become fully exempt from federal taxation. This phased approach is designed to give the government time to adjust its budget and plan for any revenue shifts. It also provides clarity for retirees planning their finances over the next 2 years. By 2026, the goal is simple: Social Security checks that arrive in full, untaxed, and uncompromised. For millions of retirees, this legislation represents justice. Many feel the government broke its promise when it began taxing benefits decades ago. They contributed faithfully to the Social Security system throughout their working lives, only to see part of their retirement income taken back through taxation. Ending that policy would restore trust and confidence in the system. It's not just about money. It's about fairness, respect, and ensuring seniors can live with dignity after a lifetime of contribution. Economists predict the bill could have wide-ranging effects. More money in retirees' pockets means higher consumer spending, especially in local economies. Seniors often spend more on essential goods and services, food, healthcare, utilities, and housing, all of which benefit communities directly. While critics warn of lost federal revenue, proponents say this increased economic activity will offset part of the shortfall. In essence, the money stays in circulation, supporting small businesses and stimulating economic growth from the ground up. Advocacy groups like AARP and the National Committee to Preserve Social Security and Medicare have welcomed the bill. They've long argued that the taxation of benefits was never fair to begin with. According to AARP data, nearly half of all retirees pay taxes on their benefits, reducing their already modest incomes. These organizations see the 2026 proposal as a long-awaited victory for seniors. They are urging their members to contact legislators, emphasizing that now is the time to fix this injustice once and for all. Politically, this reform could become a major election issue. Both parties are eager to show support for seniors, one of the most reliable voting blocs in America. By backing this legislation, candidates can demonstrate they're committed to protecting retirees and ensuring economic fairness. Analysts predict that if the bill passes before the 2026 elections, it could reshape voter enthusiasm among older Americans. It's a rare case where good policy and good politics seem to align perfectly if lawmakers can keep their promises. Another aspect of the bill includes new transparency measures for Social Security. Lawmakers propose annual reports detailing how the program's funds are managed, where tax revenues go, and how future shortfalls will be addressed. The idea is to build public trust while ensuring fiscal responsibility. Many retirees have lost faith in the government's ability to protect the Social Security Trust Fund. Clearer reporting and oversight could help rebuild that confidence and ensure the program remains strong for future generations. Supporters also argue that ending taxes on benefits could help reduce poverty among older Americans. According to recent studies, nearly 9% of seniors live below the poverty line, and many more hover just above it. Eliminating benefit taxes would increase their net income without requiring complicated assistance programs. For fixed-income households, even a few $100s a month can make a huge difference, helping cover prescriptions, rent, or groceries. This policy could lift thousands of retirees out of financial hardship each year. If enacted, states may follow the federal lead. Some states already exempt Social Security benefits from taxation, but others still tax them partially or fully. Once the federal government ends the practice, pressure will mount on state governments to do the same. States like Colorado, Kansas, and New Mexico have already introduced legislation to phase out their benefit taxes. By 2026, many Americans could see tax-free Social Security checks at both the federal and state levels, creating a wave of relief across the nation. For younger workers, the bill carries an important message about the future of retirement. It signals that policymakers are serious about preserving the value of Social Security and ensuring it remains a viable safety net. Eliminating taxes on benefits may not directly impact younger generations now, but it sets a precedent for fairness in future policy. It reminds everyone that Social Security was designed as a guarantee, not a taxable benefit, for those who contributed throughout their working years. The next steps for the bill involve committee reviews, budget assessments, and potential amendments before a full congressional vote. Lawmakers expect heated debates over funding sources and implementation details. However, with strong bipartisan momentum and overwhelming public support, many analysts believe the bill has a strong chance of passing. Retiree groups are already mobilizing to ensure the issue remains front and center in political discussions throughout 2025. For millions of seniors, this isn't just legislation, it's a lifeline. In conclusion, the new bill to end taxes on benefits by 2026 could redefine retirement security in America. If passed, it would end decades of double taxation, restore fairness, and give retirees more financial breathing room. While debates over funding and fiscal responsibility will continue, one thing is clear: seniors deserve to keep the benefits they've earned. This bill is more than a policy. It's a promise kept. By 2026, the phrase tax-free Social Security may finally become a reality for millions of Americans.